all transactions will eventually be on the blockchain, and that we're in fact at a tipping point where all of the world's biggest institutions are starting to look at how they're going to put their value on chain. Echoing sentiments that we heard from Larry Fink, the CEO of BlackRock, the world's largest asset manager. Earlier this year, he said that we believe the next step forward will be the tokenization of financial assets, and that means every stock, every bond will have its own QSIP. It'll be one general ledger. Every investor will have their own number. We would have instantaneous settlement. Now, obviously, this is going to be a huge step in revolutionizing traditional finance with blockchain, with crypto. Again, as a background, explain what tokenization is before we get into why this is so momentous.
Sure. So tokenization is taking the ownership rights to something like a gold bar, a piece of real estate, an equity, a commodity, really anything, and putting that ownership right into a blockchain in the smart contract we just discussed. Bitcoin is an example of an ownership right for this synthetic instrument called Bitcoin. Real world assets are an ownership right for real world things, real estate, commodities, equities, gold, and so on. And the transition that Mr. Fink describes is the one where the use of tokenization will no longer be limited to, we make a token about, table coin. And table coin is worth whatever you and me are willing to pay for it in the open market. That's how tokenization has been used so far. That is not really a financial product, and that's not participating in something called securitization, which is basically taking something real in the real world and turning it into a financial product. The real world asset trend is the next stage. The first stage of tokenization was literally millions of cryptocurrencies, most of which have no value. The next step of tokenization is applying that same technology, but to real world assets.
So you, again, like Larry Fink, have said that all credit, all commodities, all derivatives are going to be on chain. Why? Why do we need this? Why is this better than the system we currently have?
Sure. So there's kind of two fundamental reasons. The first fundamental reason is efficiency, is, for example, something called atomic settlement, or T0. So the US is going to T+1, which means it takes a certain amount of time for transactions to settle. When transactions take time to settle, like 1, 2, or 3 days, if it's a $100 billion transaction, we can't gain interest on that money. So I'm stuck in some transactional system where for a few days I don't get interest on the $100 billion that I paid for something. And even a few days of 4.5%, 5.5% interest on $100 billion is a lot of money. That's a very basic example. That's an example around payments and partly collateral management. So the first thing is that people like Larry Fink are mired in all kinds of legacy problems that cost them literally hundreds of millions of dollars about how to rebalance their portfolios, about how to buy and sell assets, about how to receive payment, about how to prove things to people like the NAV, the valuation of the fund. These are esoteric middle office and back office problems, which the average person has no interest in because it's not their job, it's not their problem. But these problems are worth hundreds of billions in fees and complexity and risk. And that's one of the reasons people like him are so excited, because if you're, a craftsman doing something and you had one tool and someone gave you a much better tool, you're excited about that. So that's one level of kind of why it's very important. And that's one of the big driving reasons why the DTCC, Clearstream, Euroclear, basically the three biggest clearing and settlement systems in the world are now actively talking about transitioning to this model. The other side of it is market demand, right? So the ability to tokenize things has two really great properties to it. The first one is if you tokenize traditional assets, money market funds, treasuries, you basically put them on chain, and then there's a market that wants to get them on chain because they can use them as collateral. So they can use them to back things on chain. And this is what people in the on-chain world have been doing or trying to do for many years. They've been trying to create baskets of assets that are controlled in a private key-based way. So traditional financial instruments are more attractive on chain because people want to own them on chain in a direct way where they control the asset just like they control a Bitcoin. Then there is net new assets. Net new assets are like tokenizing real estate for fractional ownership of a multi-$100 million building. Tokenizing private equity funds, where you would have had to have 5 million to get in, now it can be at 10,000. Tokenizing carbon credits, tokenizing municipal bonds, tokenizing even gold, that you can then go and redeem that gold in person against a cryptographically guaranteed token that you control, right? So then there's this whole category of net new assets that are not currently in the financial system, but once you tokenize them, tokenization is just a better, more efficient way to put them in the financial system.
Right. So digital representation of ownership of an asset on chain, on the blockchain. And how big do you anticipate this market to be?
Hundreds of trillions. Just take every market. Take the gold market, the real estate market, the debt market, the derivatives market, the securities lending market, all of these, all assets. What's fundamentally happening is you have a new format for assets, for ownership, and also for the data associated with that ownership. And the data is now appended to it in a way that proves things to you about the underlying assets. So the last time there was this type of transition was in like the 60s and the 70s, where people transitioned from paper to basically databases.
Right.
That was the last time that value, all the world's value, used to be on paper. And then databases appeared and computer systems appeared, and the efficiencies and the benefits of computer systems and databases, even before the internet, right, in the 60s and 70s and 80s, were so vast and so great that all the world's value transitioned from paper into a database record. All the world's value. It wasn't some of the world's value. You don't have any piece of value right now that you own other than whatever you have in, your